Hello everyone, welcome to the channel of Tradeometry. Today is March 22nd, Sunday. As usual, I wanted to make a video tonight to do a quick recap of everything happened in the past week. To start, let's look at some of the recent development in the Middle East. This is a Truth Social post from Donald Trump Friday after market close. He's basically saying we are very close to meeting our objectives as we consider winding down our great military effort in the Middle East with respect to the terrorist regime of Iran. Number one is completely degrading Iranians' missile capability, launchers, and everything else pertaining to them. Number two, destroying Iran's defense industrial base. Number three, eliminating their navy and air force, including anti-aircraft weaponry. Number four, never allowing Iran to get even close to nuclear capability and always being in a position where the USA can quickly and powerfully react to such a situation. Number five, protecting at the highest level our Middle East allies. The Hormuz Strait will have to be guarded and policed as necessary by other nations who use it. The United States does not. If asked, we will help these countries in their Hormuz effort, but it shouldn't be necessary once Iran's threat is eradicated. Importantly, it will be an easy military option for them. Thank you for your attention to this matter, President Donald Trump. So, this was on Friday. Donald Trump was signaling the U.S. is ready to wind down the military effort in the Middle East. And the next thing you know, this came out of Axios. The U.S. officials are planning with a potential peace deal. These are the potential terms. Number one, no missile program for 5 years. Number two, zero uranium enrichment. Number three, decommissioning of the reactors at Natanz, Isfahan, and Fordo nuclear facilities. Number four, strict outside observation protocol around the creation and the use and centrifuge and the related machineries that could advance the nuclear weapons program. Number five, arms control treaties with regional countries that include a missile cap no higher than 1,000. Number six, end of financing for Iranian proxy groups. U.S. officials said the expectation is there will still be 2 to 3 additional weeks of fighting, and Trump's envoy Jared Kushner and Steve Witkoff are involved in the discussion. This is from Saturday morning, I believe. Looks like we're getting ready to prepare for a potential peace deal, which looks good. And then the next thing you know, this is on Saturday night. Trump said if Iran doesn't fully open without threat the Strait of Hormuz within 48 hours from this exact point in time, United States of America will hit and obliterate their various power plants, starting with the biggest one first. Thank you for your attention to this matter. Just as we are thinking that the U.S. is trying to wind down the military effort and trying to prepare a potential peace deal, and then Trump flip-flop again, saying we're ready to re-escalate as soon as the next 48 hours. If you start at this exact timestamp, which is Saturday night, 1944 Eastern Time, we have less than 24 hours left, basically. Markets start to panic. We see Bitcoin start to dump after this post, and then right now we're seeing slightly red on the futures market in S&P 500 and the Nasdaq, and I believe oil slightly up. However, even though we're seeing the futures are mostly red, they are not as red as what we were expecting earlier. If you look at QQQ, the night session is trading around 580, which is not far from the Friday close at 582. SPY slightly down over 0.17%. QQQ is down over 0.36%. IWM slightly down over 0.15%. And SMH down 0.18%. And you see the oil price is up 1% roughly. So overall, it's not a panic sell-off so far. What do I think of this current situation right now? From the long-term perspective, you need to understand that United States of America is still by far the best place to invest in. Number one, they have the big tech company, the big tech domination, the Max 7. Right? Number two, they have the Wall Street. As you know, the Wall Street controls almost all the money in the world. Number three, Federal Reserve. At any point in time, if we need some extra liquidity, Federal Reserve is always there to help. Number four, US Treasury. US Treasury is still regarded as the zero risk asset by the market. Whether you like this or not, yes, US Treasury has a lot of problems. We have a lot of debt, but it is still the anchor of the entire financial market. Number four, US dollar as a world reserve currency. I know a lot of people talk about the de-dollarization, dollars going to lose value over a long period of time. But as you can see, something very interesting happened recently. If you look at gold, what happened to the gold? Usually in a war environment, gold is usually going up, but not this time, right? We started the war right around the end of February. So right around the end of February, we're right around here, around 480 level. Look at where we are right now. The gold is at 413. That's almost like a 20% pullback. Since the war started, the gold value dropped. What is happening? This goes very much under the radar for a lot of investors, or this confused a lot of investors, because usually gold is being treated as the safe haven during very volatile geopolitical situations like wars. But this time it looks like it is a very, very different situation. And if you look at the dollar index, your US dollar index, since the war started, it's started gaining a lot of strength. This tells you one thing: US dollar is still the main currency, is still the world reserve currency, because United States is still the number one economy in the world, and there's simply no replacement for that. It has the strongest military power, it has the best technology, has the best big tech company, and has the Wall Street, and it has Federal Reserve. That's all you need to know. There is simply no other country have all these kind of powers. The United States, it basically covers every front. It's been the best of the best in every single industry. It's leading every single industry, right? If you look at the top 500 company in the world, 60 or 70% of those companies are from United States. And if you look at top 200 company in the world, it's like over 70% are from United States. If you look at even more top tier companies, like the top 20 companies in the world, like over 80% of those are from United States. The US companies are even more concentrated in the top of the top tier companies in the world in almost every single industry. You cannot find another country with this kind of productivity or entrepreneurship or innovation or technology, you name it. There is simply no replacement for United States of America. It is still the best place to be. It is still the best place to invest. Simply because it is the best. It has been the best for the past century. It has the best environment for companies to be successful. It has the best resource for the companies to be successful. It has the smartest people in the world to make these companies to continue to be successful. Winners keeps winning. So even if in a worst case situation, in an absolute worst case situation, we go into recession, we know one thing for sure. The Federal Reserve will turn on the infinite money printer immediately, and everything will get V-shaped recovery, just like what happened in 2020 during the pandemic. It is very, very difficult for US to go into a recession since 2008. Do you know why? Because we invented something in 2008 for the first time. It's called the quantitative easing. Quantitative easing is basically when the Fed drops the interest rate to near zero, so the banks can basically borrow infinite amount of money, and the money got pumped into the financial system to increase the liquidity of the financial market. We basically can inflate asset price at zero cost. This is a very, very unique strategy that only Federal Reserve can do, because we have the US dollar as the world reserve currency. We are able to do this without too much of a consequence, even though some people argue there will be consequences later on. But as of right now, we have been using quantitative easing for quite some time, and it seems like it's doing just fine. Even though they were being criticized during the pandemic, saying it has caused massive inflation, I'm personally disagreeing with that opinion, because quantitative easing started in 2008 and we were being doing just fine. The inflation, I believe, was mostly caused by the war with Russia and Ukraine, because as you know, when the oil price spiked up due to the war, and everything relates to oil price get pumped up, and it will squeeze the supply chain in various places, and then the inflation came afterwards. So I still believe that quantitative easing is a very, very powerful tool that will be able to get us out of recession if there is one. And on top of that, we have printed so much money in the past few years through various government programs that people still have a lot of cash reserves in their banks. Also, the stock market did really well in the past few years, that household wealth are still at record high. Also, I wanted to mention that even though some of the entry-level white-collar jobs are being replaced, the blue-collar jobs are still in high demand because we're building all these data centers. The construction workers, the electricians, plumbers, gardeners, and even some healthcare workers are still in high demand. Employment is still in relative balance despite low job creation. Because of the recent mass deportation, we're losing some labor force because of that, and you're also not seeing as many job creations in the past, but we also seeing the unemployment rate relatively stable. So even though we're not hiring as much, we also did not fire as much. So the labor market is still in relative balanced. Now, if you look at the stock market, look at S&P 500. For the first time, it's below the 200-day moving average. 200-day moving average is usually a very, very critical support for stocks, especially index like S&P 500. If you go back and look what the 200-day moving average can provide for support, it's usually a buy the dip opportunity, like 9 out of 10 times. You can check back in the past few years. So this is 2018. You see this 200-day moving average bounce, and then come down again, a bounce again, and then come down again, a bounce again. Every time it worked. And then this is the one time it did not work. So it fell through. Actually, it bounced the first time, and the second time it fell through. Goes back up and down, and goes down a lot further. So this was the first trade war initiated by Trump, I believe. And you see this little mini crash. Even though we crashed below 200-day moving average, but we very quickly, another V-shaped recovery you see here to reclaim the 200-day moving average. Very quickly, actually. It only took about 2 to 3 months, and it's already making highs like a V-shaped recovery. And then the next bounce right on the 200-day moving average again, right here. And then you go up and down. 200 moving average once, twice, third time, and fourth time. Like every single time it bounced on a 200-day moving average. The next time it broke through was 2020 pandemic. So that was a very extreme situation because of the pandemic. You don't expect that to happen very often. That was pretty bad. But also it only took about 2 months to recover the 200-day moving average, and then that became the support again. You go up, and for a long period of time it didn't even touch 200-day moving average. Once it goes above, and it's all the way to 2022. For the first time it touched 200-day moving average again. So from here we consolidated and bounced. The first time it bounced. So this was the start of the 2022 bear market. So what happened in 2022? right? The Ukraine-Russia war, it broke out and the oil price spiked. And even then, we had the first initial bounce and then the break. And then we bounced again. And then we break lower. So you see this, even though we're eventually going lower, but we still get the initial bounce actually a few times before we actually break below the 200-day moving average decisively and go much lower. The bear market lasted for about a year, and then on 2023, we recovered 200-day moving average, and then that was pretty much it. So 200-day moving average becomes support again. Right here, the first time bounce. The second time looks like a fake breakdown and then a V-shaped recovery all the way up to all-time high. And we never look back. And this one is the 2025 trade war, the Liberation Day. This is also a very unique situation where a lot of institutions got caught off guard. But even after this, we did another V-shaped recovery very quickly to reclaim 200-day moving average and all the way to all-time high. This is the first time in over a year we touched 200-day moving average again. So by the previous experience, even if we were going lower eventually, most likely we will get a first bounce and then we do a second test or even third test, then decide if we go lower. So usually the first bounce, regardless we're going to all-time high or not, is usually a buy the dip opportunity, regardless of whether we're going lower later in the year. So generally speaking, the first time when major index like S&P 500 or QQQ goes to retest the 200-day moving average is usually the best buy the dip opportunity. The second time or third time, it could change. Things can change, but usually the first time, like I just showed you in the past, 9 out of 10 times it's going to bounce. It's very, very rare that it will just break down. It couldn't even hold the first retest of 200-day moving average. And you look at QQQ, it's also right around 200-day moving average. If you look at IWM, the Russell 2000, right at 200-day moving average. Dow Jones, slightly weaker. It has been like 2 candles below 200-day moving average, but this is also a major support. I expect a lot of deep buying at this level. So as you can see from all the major indices, we're sitting at 200-day moving average, which is extremely critical support for the US stocks. And I think you should also know this. Trump cares deeply about the stock market. So don't be surprised if Trump comes out declaring victory all of a sudden. Even though I don't know how the war will end exactly, but it really doesn't matter right now. US will find a way to win the war. Iran is outmatched in every possible way. No matter intelligence, the equipment, the weaponry, the soldiers, the allies, you name it. Iran have zero chance to win this war. Everybody knows it. And now NATO just declared they are officially joining the fight. And a lot of other countries like Japan and Korea most likely will also join, We have over 20 countries going to join this war, and it's going to be end much sooner than most people are anticipating, I believe. Right now, S&P 500 is slightly red, but I'm not too concerned, to be honest, because I've also shared a lot of information from last video where we have the fear and greed index sitting at extreme fear at 15 right now. And also, if you look at the AAII investment survey, the bearish sentiment is also sitting at record highs. Actually, the record high was 61%, which was the Liberation Week. This was getting close to that level, which means the market is already extremely bearish. So overall, in my opinion, this is the very good buy the dip opportunity. We might get a week or even 2 weeks of bounce before we top again. So regardless what happened next, I think the next move is going up. As you can see, my account was down 5% past week because I have some call options, and Friday was a pretty red day, so I was down over 5% because of the drawdown on Friday. And similar story on my traditional IRA, down 4% over the past week, mainly because of the Friday drawdown. Without the Friday drawdown, I was actually positive for the week. So not too concerning, but I'm continue to be bullish in the next week. I think we'll get a very quick bounce at the start of the week. So we'll see if I'm right or not very soon. So that's all for today. Thank you. If you'd like to join my Discord channel, please check the link in the description below. Please don't forget to like and subscribe. I will see you next time. Bye.
Another Monday, green on the screen, feeling so serene. Leverage the assets, living the dream, a money machine. Blue chip vision, make the right decision with perfect precision. Yo, we own the street, can't accept defeat. This bull run is sweet. Market cap.